have a look at really what's occurred overnight, and then what we're looking out for in today's session. And it's kind of turning on the screens this morning. It's very much so, it looks like a continuation, more broadly speaking, a lot of the themes we were seeing yesterday. You can see from my currency pairs I've got on the top left of my screen, you've got euro dollar top left and cable in the middle on the top, and you can see a divergence which was apparent really yesterday as well, where you've got euro dollar coming under fairly persistent pressure this morning for finding a bit of support at S1, already down around 42 pips, whereas cable on the flip side is up 27 pips and sitting above the 125 handle. We talked about this yesterday, and still I think the same applies, where even though we had some very strong manufacturing and service PMI data out of Europe, actually it seems as though the election jitters are starting to elevate, if you like, in terms of tensions around the French election in particular, and that seems to be the overriding kind of factor weighing on the euro currency, at least for the time being. And this of course is in contrast to what we had, what's developed overnight. Quickly to show you the headline in terms of the House of Lords, the draft Article 50 bill that they've been hearing the second reading over the last 2 days, that's gone through really without any real issue, largely as to be expected. So after 20 hours of debate over 2 days, the lawmakers of the House of Lords agreed without a vote late last night to let the European Union bill move to its next stage in scrutiny process. So essentially what happens next, this goes on to the committee stage now, which would be on February the 27th. So the bill moves to be debated then next Monday and Wednesday, when legislators will consider the amendments. But I guess the one thing that does provide from a UK point of view is, and talking to a few of the guys here yesterday, was that at least there's short-term clarity on the situation in terms of Article 50. And if you like, until that gets triggered, then really I think nervousness will return to the situation. But for the time being, i.e. the next 4 weeks, likelihood there's a degree of calm because there's a bit of clarity for that near-term outlook. In contrast though, what we have been seeing is obviously a lot of focus on French polls. Recent tightening of those polls in particular in favour of Le Pen versus Macron and Fillon, aside from the opinion way polls which have garnered some traction in the last few days, further polls have basically revealed first round support for Le Pen at around 27.5%, which is an increase from the same poll done just 4 weeks ago of around 1.5 percentage points, while support for Fillon has actually gone up 3 percentage points, obviously getting over the scandals that have been affecting his bid, if you like, for the presidency over the last few weeks. And that's been to the detriment of Macron, which has had his own kind of headlines to deal with in a negative light, and he has fallen 5 points in that poll to 18.5%. The most interesting part though here is that in the second round, which Le Pen is still expected to lose, the actual gap though between her and Fillon or Macron is narrowing, i.e. it's getting a closer run affair. And how is this playing out in the market? Well, essentially this is a chart I've just seen come down on Twitter the last couple of minutes, and it's looking at the US-German 2-year yield spread at 211 basis points. That's the widest in 17 years. The euro very closely tied to that spread. This is Jamie McGee, who's one of the head guys at Reuters, and so he's looking at basically what he's got mapped here on the chart is this is inverted, so it is going higher, i.e. the spread's widening, but what it's showing is that the wider the spread gets, the more kind of fear, if you like, in the market over these situations, the more pressure. You can see the correlation between that and euro dollar at the moment is quite clear. And actually looking at euro dollar this morning, obviously on a shorter time frame, we've obviously found a bit of support around S1 initially, but what this morning we've seen a bit of an extension of selling pretty early as Europe has come in, not only a break of the lows that we saw yesterday afternoon, but also the low that we're seeing kind of mid part of last week. Likelihood then just helping that move to the downside technically to then run down to S1 before seeing a bit of a bounce. If we start looking at this chart though, further drawn out over a longer time frame. Obviously, the big decline seen through 2014, but really it's that 105 level is really important. And if we get below there, well, you can see 105's importance given the kind of support level it provided back in late 2015 and around spring of 2015. Just below those levels, it's really some critical points for the euro, where if you would think that we can get through these another kind of 2 points or so to the downside, it really does open up a real bit of air to the downside technically. And then with all the European obstacles, you could say, forthcoming from a political point of view, it would be interesting to see how this does play out. The only kind of other thing in contrast to that was the economic data we had yesterday, which obviously was very solid. But I guess in the near term, it's these threats on the political horizon that are really gaining traction at the moment. And still not a lot of people talking about it, with the focus very much on France, but those Dutch elections as well creeping up fast. They'll be actually before the French ones. They're on the 15th of March. Quick look elsewhere though on the other charts. One thing is that I was talking to some of the guys before they left after European close yesterday, and we were kind of down here in the S&P after reversing that kind of ramp higher that we had through the open of Wall Street back to kind of this record territory. A lot of the retailers taking a benefit yesterday, higher move in oil prices as well, helping respective sector. But kind of joked with them, I bet you would be back up by the close at the highest point of the session, and lo and behold, at the close we printed pretty much, or just before the close, up at those levels. There really is no holding back these US equities, and again it kind of, for me, it just validates that view that there's very little. I mean, if you're looking to short US equities, again you've got to be pretty realistic with shorter time frames where the prevailing trend is still higher, and I see very little at this point at least to change that. I think longer term, obviously, it's going to be very telling over the coming months once we've had a bit more time with Trump to see actually what does start to come out from a fiscal side of this. With Trump talking about the man of the hour. So Trump is due to address a joint session of Congress on February the 28th, while the release of the White House's phenomenal tax plan in the next fortnight or so could bring some clarity to the White House's position. So we're going to get a couple of key points of interest coming up in the not too distant future with Trump. So the 28th of Feb, when he has that session of Congress, and then later on we'll be expecting then into March this tax plan, which you could argue has almost pumped up the market more recently in the last few weeks since he made those original tweets and statement. It almost feels then he's got a lot to live up to, or is this just part of the broader plan? It's yet to be seen. The other thing, looking at the DAX, obviously a really strong day yesterday for the DAX, and we're up there again today, above 12,000. If you start looking, we were looking at this yesterday early morning, and technically that 11,895 level was key. We got above there, and you can see a really strong break, and then we were just bid pretty much throughout the day, and this morning elevating above that 12,000 level. Corporate earnings again taking a bit of focus. A couple of names to just be aware of. ThyssenKrupp, they're up, one of the best performers in Europe, German firm, just shy of 5% higher. They've agreed with Ternium on a sale of a CSA steel plant for 1.5 billion euros. That's their kind of Brazilian unit they're spinning off, so seen as a net positive for the firm. On this regard, a question I often get in terms of interpreting individual stock headlines that you see, we talk about the influence it can have in terms of the way we look at it in index futures such as the DAX, and knowing the market weighting of a company is critical in order to make those quick, fast money decisions. So just a quick look. Simply this morning, I just wanted to double check the kind of size of ThyssenKrupp to see what it is in the index, and you can pretty much do this on all of the indices that you look at. So you have to type in the exchange. So I've kind of prepped it up with what I did this morning. Deutsche Börse, index weighting. That brings up then this list you're looking at here. You go to downloads on the DAX indices. I then go to composition, and you can see these get updated regularly every month. I click on February. I can get every day, given the fluctuations of individual prices. It's recalculated. Obviously, I don't think you need to look at it every day. The changes will be fairly minimal, but maybe every quarter I would want to have an updated view of how big are these companies, just in case there's any substantial changes. If I click on the 21st, essentially what happens is it brings up this spreadsheet, which is pretty comprehensive. But what it can basically do, it orders every DAX component by in alphabetical order of all the major German firms. What I'm really looking for is the index weighting after the last regular rebalancing, and then I can just look at who are the biggest firms. So obviously the names you're familiar with, so BASF, Allianz, but I can find ThyssenKrupp down here. And that's how I'd go about my regular kind of keeping myself informed and up to date in regards to doing the same with the London Stock Exchange and other bourses across Europe. Other news then this morning in terms of equities that are positive, just given in light of equity markets on the front foot this morning. You've had Lloyds, they're up as well about 4% this morning. So Britain's largest mortgage lender, fourth quarter profit, even as it faced more than £700 million of conduct and restructuring charges. Amazing, actually, that these banks and their quarterly earnings are still paying the penalty for the misbehaviour, if you like, of years gone by. I.e. the subprime situation, the mortgage market, PPI, and so on. But markets are very much over that fact. Litigation fees are kind of yesterday's news, and it's kind of a normality, as strange as that may sound. And now profitability is going up at these banks, and Lloyds being one. Certainly they've had a decent performance out the gate this morning. Also as well, one of the home builders who was suffering yesterday, we've had an update from another one, Barratt Development, this morning, but they've kind of bucked the trend and they're up about 4%. So a couple of individual positive names out there as well. Other things from overnight to be aware of. You might have clocked this comment late yesterday evening in the US session. This is Feds Williams. Now the important thing, of course, like we just discussed with knowing your size of index weighting of individual components that make a stock index, then you need to apply the same principles from a fundamental perspective in knowing your Fed members. Now, Feds Williams is not a voting member of the FOMC. So interpreting this type of headline, you have to put it in context. So it has a lesser weighted impact given the fact that Williams is a non-voter. But obviously it flies in the face of a lot of the Fed talk that we've had more recently, which has been very hawkish, talking about reductions of balance sheet in the near future, intonations towards March being very much an option on the table, while Feds Williams says historically low interest rates will persist. So kind of bucking the trend from the San Francisco Fed president. But again, this is quite to be expected. This is where you get that spectrum of different views on the policy board, and it's not that surprising. Hence, really, the dollar has brushed that aside, and dollar index is up around 1/10 of 1% this morning. Talking of the Fed, of course, we have the FOMC minutes coming out later this evening, because otherwise in the US afternoon it is pretty quiet. There's existing home sales, but I would say the housing market is not of a great deal of market attention at this particular point of time because of its lower down the pecking order. I guess the Fed are more concerned with inflation, if anything, and wage growth. But for the FOMC minutes, reading what Deutsche Bank are looking at this morning, they expect the minutes to paint a relatively upbeat picture of the economic outlook, but stop short of strongly signalling a March rate hike. I couldn't agree more with that, just given the same situation of they still do not have the required amount of clarity over the fiscal situation. And given the fact that Trump and his corporate tax plans and so on are coming in the forthcoming weeks, they wouldn't have been armed with enough information at the time, I don't think, to have given a clear signal that March we're going to see a rate hike. That's not to say, though, that I think that they will say that the economic performance of the US is on the uptick. One thing to keep in mind, of course, the Fed did not have the January employment report or the latest inflation data at the time of the last FOMC meeting. Hence, really, we're a little bit better equipped now, knowing those pieces of information, than the Fed were at the time, and so therefore the minutes, you could argue, are a bit defunct and out of date, and are really, in the grander scheme of things, somewhat stale in that regard. So the minutes, I don't think, are going to throw out too much in the way of surprises, and I don't think are going to have too much of a market impact when they're released later on. One thing to quickly have a look at before we get on to the calendar for today, because there's German IFO coming out shortly in 10 minutes, which is a key piece of data, is oil prices. And I need to point this out for Vas in particular, because he has his ongoing bet with Piers about the 55 line in the sand. And Piers being of, we're going to trade above it, I think that's the bet. And he managed to just squeeze it out by 3 cents last night, which means that Vas owes him another round of beers and a night out on the town. So that's twice in a row now. Vas has got stung by about an average of 5 cents that Piers has managed to call it right on both occasions by literally the skin of his teeth, but nonetheless correct on those calls. But looking at oil, I think stretching out the timeline a little bit further, certainly, there is I feel, quite a clear strategy that these oil-producing nations are trying to follow at the moment. Looking out here, this is kind of encapsulating mid-January through February, and you can see here we had a print briefly early part of the month sub 52, and what you're seeing is when we get toward these lower bound of recent price ranges, then you start to get lots of talk from various oil ministers and oil producing nations about how great the compliance has been. Look what a fantastic job we're doing. Even talking about we should start looking towards in the summer when this agreement expires, what cuts should we do then? And inevitably the price starts to recover and move to the upside under that kind of communication. Then we got to the kind of upper bound, and I think then it starts to get quite technically strong, as well as I think that then they've kind of done their job when it starts to push up to around their kind of sweet spot of being comfortable from that perspective, which is around this kind of $55 handle. And then I think they just like to just let it drift, and inevitably it might come back down. But I think this is the new norm, if you like. I don't see any reason really for oil to change much in the coming weeks, even months, from this present point of where we're kind of defined around the kind of low to mid 50s. So quite interesting in terms of oil. Certainly it's not so much of a driving force that it was, and really from a news perspective or a fundamental driver of markets, unless it's at the upper or lower bound of these kind of defined longer term ranges, I would say the market really isn't too concerned about the price at that time. And they know full well that OPEC are not really going to be that vocal unless we're at those defined parameters. So another thing to keep in mind, the API crude oil inventory data obviously did not come out last night owing to the US President's Day holiday, so that will be this evening with the DOEs delayed until tomorrow, which is always the case for the US bank holiday. Okay, just quickly, German IFO coming up shortly. That'll be at 9 o'clock. You've got the second reading of UK GDP at 9:30. It's expected to be unrevised. Same case, unrevised in regard to the year-on-year from previous for the European CPI. The month-to-month, though, we'll keep an eye on that when that comes out. And then Very quiet in the afternoon, as I said, for the US, but FOMC minutes in the late evening, our time. Speakers, you've got Pratt speaking a couple times throughout the morning, and then Fed's Powell as well speaking, who is a voter, later on. Just having a quick look at sterling here. Cable's just seen a bit of a downturn. If I just put it onto a minute, fairly quick move. When I see a move like that, I pretty much know that that's not a headline that's come out. If that was a headline, that would be a 1 minute candlestick straight down, straight 30-40 pips. The market, in terms of reaction to fundamental headlines, it either moves or it doesn't. If a headline's come out on a major news terminal, the market moves almost instantaneously. When it's like this, would say to me that maybe more technical, some levels, maybe a pickup in volume as we've just gone lower here. In the context of the dollar index as well, just breaching above yesterday's highs, already euro down. This is kind of the direction you would imagine that both pairs should be doing amid the dollar strength. So doesn't look like it's anything fundamental here with that cable move. Quick look at IFO just before it comes out in the next couple of minutes. That figure, actually, when it came out the last time, was the lowest since September of last year. Nonetheless, it's still fairly elevated from where we were post-Brexit. Don't forget that this is a measurement of entrepreneur sentiment about current business situation and their expectations for the next 6 months. A survey of 7,000 firms across various different industries. The reason this is such an important number for Europe is because it's for Germany, obviously the driver of the Eurozone, and then also this is about firms' expectations, not economists and analysts. This is the people on the ground. So you would think you would have a better reading. Keep in mind the PMIs yesterday were very strong, so it'd be interesting to see how this feeds through into this data. But again, this is a sentiment reading, and are Europeans getting nervous about the political situations on the horizon? So could that have an impact on their investment decisions going forward? So that's how I'd interpret these numbers and risks around them going forward. Okay guys, with that number coming up in the next couple of minutes, I'm going to leave it at that for the briefing for this morning. So I'm going to wish you a good session, and I'll see you in the chat room, and I'll be covering that data live as it comes out.